we are starting out more as a platform from the beginning and plugging in different players. And maybe more to this, what you see in Africa has happened in Europe and in the US a couple of years ago with that unbundling and now rebundling of services, right? So to maybe double click on that for a second, traditionally you had banks that said, look, we're offering everything and we are a big monolith and therefore you're not really a specialist in any.
Yeah.
And that's why fintech said, well, slowly but surely, I'm going to pick different services off of your system, right? That could be payments acquiring, that could be lending pieces, that could be card issuing pieces. But what you haven't yet fully seen in Africa is that rebundling. So people saying, well, let's partner up and
Yeah.
actually use those best-in-class services to kind of bring that back together,
Yeah.
so that an SME doesn't end up with 20 different logins left and right to actually
Yeah.
figure out their systems, and really making sure, and that's what we are building for.
And there's a lot of like replatforming. If you know how some of these major banks kind of underlying systems work, for you to now provide the full digital experience, there's a lot of kind of like replatforming that needs to be done. That's quite painful, and especially if you see it in the context of the nature of the organization. It's one thing. I was reading about Mercado Libre, and back like 13 years ago, they needed to do a full replatforming because they had built using Oracle databases, and now the likes of Facebook and Amazon, were coming up, and they needed to build a full platform. And they said we're going to build an entire platform from scratch. In this episode of the F Squared podcast, I speak with Vince Jacobs, the CEO of Zazu, an SME-focused neobank based in South Africa that's gearing up for its public launch this August. Zazu isn't just building a digital bank, they're building financial workflows designed specifically for small businesses. We explore their journey from concept to execution, their banking as a service architecture, and how they've approached product development in a way that prioritizes real SME pain points. Rince also shares their perspective on the evolving South African fintech landscape and what it takes to build a scalable platform in a market that's still underserved yet full of potential. I think we spoke 3 years back, and you guys were still doing your research, still trying to figure things out.
Right.
Now you're in Cape Town. I think you've made significant progress. Before you tell us more about like the journey, maybe walk us through like what you felt at the time was the problem, specifically that SMEs are facing, and the specific SMEs that you're trying to target, and why that problem persists. Because I think you released a report the other day with Whiteside, great report by the way. And it seems like a global problem, but I'd want to hear it more from your perspective, the South African perspective, and why that specific SME problem persists in South Africa.
Yeah, indeed. So we did quite a bit of research because it's not unknown that globally there's a mismatch between what banks have been offering traditionally and what SMEs are actually in need of. And we said to ourselves, instead of just assuming that we know what it looks like coming from the European market, let us just go to different places and talk with SMEs and see what they're all about, what tools are they using, and what kind of stories do they have to tell when they are talking about banking. And unfortunately for South African banks, no good story was being told, right? So everybody was talking about how they had some kind of horror story that was haunting them.
Yeah.
And that was literally us walking on the shopping streets and knocking on the doors of boutiques and random small stores, sitting in co-working spaces and talking around the coffee machine with different founders and just having an open conversation on, hey, what is
Yeah.
it that you are missing or that you're seeing?
Yeah.
And also then opening up our own SME banking accounts in various of the banks in South Africa, and it leaves lots to the imagination. Let's say it like that.
You were saying that you walked across the streets of South Africa, in co-working spaces. Everyone was just complaining about their SME experience, at least what banks were offering. And I was just digging into what was it specifically. Was it just a kind of mismatch between the way an SME operates now versus how banks are set up from a SME perspective? Was it a credit issue, like I'm not accessing SME credit? Was it just the payments, or was it just a combination of all those factors?
Yeah, so I think it's threefold. So the three main arguments that we heard was customer service is not where it should be. You are the one that have to follow up and to chase over different channels with the bank. It is the opaque fees, right? Not knowing what you end up paying at the end of the month.
Yeah.
And if you start to do some digging and open up that fee book of a bank, first of all, they have a fee book
Yeah.
of 6, 7, 8 pages, right?
Yeah.
And you will never really understand what it is, what you're paying when.
Yeah.
But most importantly, it is that especially the traditional banks have a very one size fits all proposition, which obviously doesn't solve the very particular pain points that you see in different micro segments, right?
Yeah.
So a graphic designer has a very different pain point around banking than maybe a taxi driver or a plumber may have. So just by solving that through one product or one proposition, you are not doing yourself a favor in capturing all the pain points that you otherwise can. So that's what you really see being the big mismatch between SMEs and their banks.
Got it. It's interesting you say that. I wrote some time back about the exact same thing, and my main point was that there's a lot of new businesses forming. There's a lot of new SMEs forming, and they're all very platform oriented. Gig workers, as you say, graphic designers, taxi drivers, all on these platforms. And this is like the new kind of employment nowadays, right? That's to a large degree the new kind of employment, and and there needs to be a separate group of kind of banks or digital financial service providers that are serving them, because the banks are just not set up to do that. And it's interesting you say that. One of the questions I had is like, now, given that problem, right, how did you come across, and the funny thing is that there's also an element from the bank's perspective where compliance and regulation makes it difficult for them to now actually build the right types of products, because you have to tick so many compliance boxes when you're launching a product. Do you think that's what's driving that kind of mismatch, or is just like a cultural or commercial lack of fit?
So in our thinking, innovation comes from two dimensions. So it comes, of course, from the set of products that you're offering as a company, let it be a bank. But it also comes from that mindset that the people in that company have. Do they care for really pushing the envelope and
Yeah.
going that next mile in understanding their customer?
Yeah.
And globally, banks have been doing quite a bad job at how can you further visualize the data that is available through your transactions and through how you as a customer are using their products. So it is not always about how can you get more compliant tied products out there, but how can you go beyond banking to actually help those customers do things that are maybe liaising with banking or adjacent to banking, but
Yeah.
are not per se touching upon your license, and therefore building out your own platform as a bank
Yeah.
is, I think, what needs to be done, and that requires a bit more of a tech DNA, right? That's what you see tech companies do quite well in expanding their product portfolio, and banks have been typically quite traditional in keeping with what they know and
Yeah.
continue to do that.
Yeah, but I think nowadays we're seeing a bit of that. I think we have there's some banks that are trying to do that. I think Sterling Bank in Nigeria has kind of had a VC type portfolio approach to innovation. I think NCBA in Kenya has Loop, which is their tech house. So it's happening, but maybe not at the scale at which it should happen. But now back to Zazu. So this problem is there. Like, what were the steps and the sequencing to actually, beyond the research, post research, to actually get something on the ground?
Yeah. So we believe in adding a lot of attention in where we believe we can make the biggest difference. And for us, looking at the banking stack, right? You have the regulatory side with the core banking and the reporting side, and you have the product orchestration, and then you have that experience layer. So we believe in adding a lot of value on the very top side of this, which means, right, the experience and the partnerships that you can have with other fintech providers or tech providers. What we don't have a lot of value or see as a lot of value for us right now is going very deep into the machine room where the actual plumbing of the banking sits, right? The core banking systems, the regulatory reporting, the license side of things. So that is why we decided to partner with a bank so that we can plug into their existing systems, which also gives right away a certain trust to the market that we are not just a random Wild West new bank out there that's trying to do things differently, but actually are guided by somebody who knows how the market operates regulatorily. So that's where, right, we play on the experience and orchestration side of things. And that's where you can be a bit more free in how you are designing these products.
Yeah, and that raises two questions. I think the first one is, usually with such frameworks, let's call it banking as a service, a BaaS provider, and in this case, a bank is offering their rails on which you build on top, and of course, the experience layer is where at least the biggest friction point for the SME is, right? Like they don't care about the ledgers in the background. They care about how you orchestrate their services. But one challenge that's emerged is number one, like lack of reliability of the underlying banking rails. And sometimes like compliance overhead from your banking partner that usually manifests in slow time to market, slow product releases. Have you experienced that?
Yeah, yes, we definitely have experienced this ourselves as well. So without naming too many names, but indeed, it is something that is a bit what happens, and you need to kind of go through this. Luckily, it helps, right, that I come from the banking side, where I was on the other side of the table in the European space. So it helps to facilitate that conversation a bit more because I roughly know what they are expecting and how they are looking at opportunities. But indeed, you can see, coming back to that mindset aspect of innovation or driving the envelope, is where a lot of people are just doing their job, right? And not really caring for pushing that innovation through their license. On the C-level side, it is a bit different from most of these banks because they understand, we are perhaps a tier 2 or tier 3 bank. So it is very difficult for us to grow our balance sheet or to grow our portfolio by competing directly with the big banks. So the only real way that they can compete and get significantly more volume on their system is by partnering with non-banks, fintechs, telcos, insurance companies and whatnot. So that's that embedded finance or alliance banking play that some of them are really, really pushing for. But it's indeed not with its own challenges, that's for sure.
And so that leads to my second question, because like we've seen, a number of models in Africa, at least even globally, right? So there's a kind of like full license approach that some people are taking. Let's say Revolut in some markets, Neobank specifically has taken, despite it not being purely SME, but it's taken a full license approach. Then there's the BaaS play, and then there's players that are coming in from like a payments perspective. Like we'll offer payments product first, and then once we get your flows, we can now move deeper into the product stack, into savings and stuff. So the money points and players like that. Do you think any of these have a specific right to win, at least in the context of the African market, or do you think that all of them can thrive because fundamentally it depends on what specific market you're targeting?
So looking at the Revolut or similar full bank owners, they started out often as a neobank without a license. And then as their volume grew up, they said, how can I marginally improve or incrementally improve my margin rather on each customer, because my customer is now of significant value. And that's when that overhead cost of maintaining a license starts to make sense. But you need to get over that first hurdle because otherwise you spread yourself too thin very quickly. It often makes sense. So a lot of people say, well, start with a very simple wedge. Could be payments, could be lending. There's a couple of different players in Africa, of course, who have done that successfully. But what you often see also on the global fintech world is having started out as a wedge and becoming quite big as a payment provider in this case, to then transform yourself into a full neobank is quite difficult because a lot of companies already know you and use you and plug you in a certain way. They have kind of set up their own orchestration or architecture of their finance world.
Yeah.
So this is also the reason why an Adyen or a Stripe never became the Mercury, right? For example, in the US. And this is why I think it's quite difficult for many specialists who started out as unbundling some of these fintech services or some of these banking services as a fintech to become a horizontally broad product offering. That's why we are starting out more as a platform from the beginning and plugging in different players. And maybe more to this, what you see in Africa has happened in Europe and in the US a couple of years ago with that unbundling and now rebundling of services, right? So to maybe double click on that for a second. Traditionally, you had banks that said, look, we're offering everything and we are a big monolith and therefore you're not really a specialist in any.
Yeah.
And that's why fintech said, well, slowly but surely, I'm going to pick different services off of your system, right? That could be payments acquiring, that could be lending pieces, that could be card issuing pieces. But what you haven't yet fully seen in Africa is that rebundling. So people saying, well, let's partner up and actually use those best-in-class services to kind of bring that back together so that an SME doesn't end up with 20 different logins left and right to actually figure out their systems. And really making sure, and that's what we are building for specifically, is how do you make sure you have one login, can use multiple services, and through that can very easily reconcile your financial flows and understand what is my SME's financial health actually looking like, and how can I improve that by using an AI, of course.
It's true. I mean, it's, you know, as an SME myself, I feel that pain, and it's usually because, you know, there's so much going on. You need very clear insights into how money is coming out in and out. You need potentially like accounting support, like can you automatically classify this income or this expense, and, you know, so that I can now do proper analytics. But then, you know, that is a specific type of SME, especially in the African context, because I think the stats from South Africa, only 23% of SMEs are formally registered. Of course, the bigger they grow, the higher the percentage of, you know, formalization. But that it speaks to a specific type of SME. Now, from your perspective, you know, of course, you have some clients. Are you seeing any kind of like archetype emerging that this is the typical Zazu archetype, and this is the archetype that we're going to scale with? Because from what I hear, it's very urban, at least past a specific threshold in terms of income, and also digital sophistication.
Right. So we are indeed looking at the very lower end of the SME bucket in terms of the companies that effectively have been forgotten by the big banks back in the day because they couldn't bank them profitably. But on top of that, we also know that typically the tech-savvy entrepreneurs and business owners are the ones that are early adopters of such new products. These are companies that are using Slack and Notion and are just demanding a bit more design and experience from their bank. So what we are expecting is to grow more with e-commerce players, B2B services, and various types of freelancers. But for the go-to-market, we have also said to ourselves, well, let's not dig our heels too deep into these hypotheses of our ICP, but rather talk with a lot of different micro segments, right? Graphic designers, e-commerce owners, tech entrepreneurs, taxi drivers, really, and take 30, 40 of them and sit with them for a day to really talk about what do you like about your banking, what is the biggest pain points you have, and through that and having them on board, see how their retention goes into the system, how active are they on your platform, and only then you can start looking at how can I put some paid marketing on top of that to see if that actually sticks and the conversion rate increases for that segment. So we are not saying we're particularly focusing on one segment right now because we're too early to really say that. We are working very closely with different types of companies to see for who are we solving the biggest pain point, right? And who are we providing the biggest relief for at the end of the day,
Yeah.
so that they remain customers.
And any early results so far? I won't. In terms of like this seems to be working for this specific group.
What you see indeed is you see a handful of early tech entrepreneurs, right? So there might be one or two co-founders, they may have one or two people or engineers with them who just need an account and a card and want to know that if I want to get my payment systems up and running, I can do that through Zazu because Zazu partnered with somebody.
Yeah.
If I want to grow with my payroll at some point, I can connect different payroll providers through Zazu in there. So we are typically focusing on the companies, or for now expecting to focus on companies that have a higher likelihood to kind of grow up to 50 FTEs max. That's where we see our sweet spot. But we don't really care too much about, and banks often classify based on revenue types or revenue amount. We don't care for that. We really look at the number of FTEs that are in your organization, because that typically shows what kind of workflows are needed in your organization. Do you have a finance team, right? A dedicated access for them? Do you have an HR team who may want to have a specific payroll account and deal with payroll providers for that in that sense? So we're looking at that a bit differently. But at the end of the day, the tech savvy guys and girls is what we're focusing on for now.
And from that, would it be wrong to say it seems like you're evolving towards like a Mercury type business, because Mercury kind of does the same thing. It's focuses on that tech savvy, grows with them, but also a lot of digital businesses that are setting up globally even just use Mercury, and that seems to be your emerging sweet spot. Would that be an accurate classification?
Yeah, so no, Mercury for us is a big inspiration, just like Conto in France and Tide in the UK.
Yeah.
And that is also why what we are seeing is from that informal market that is indeed quite large, there is roughly 15% that wants to become formal. They just lack the know-how or the confidence that they get the right support, because they feel, if I mess up with the SARS, or if I with the tax authorities, or if I mess up with some kind of regulatory stuff, I don't know what to deal with and what I'm getting myself into. So they want to have a guiding hand, not only for the bank account, but also for how do I incorporate a business and how do I make sure I pay my taxes on time.
Yeah.
And these are all these small features that we are building in. And that's why in South Africa, we're working with GovChain, who are digitally incorporating companies, which also, as soon as they get incorporated, we get back that data. So the KYC becomes smoother, and they truly feel that they're being walked through a funnel and being supported by that, right? And then we give them heads up on like, hey, your tax bill is due on X date, or you have this money coming in. We would automatically save 30% of that into your tax reserves account. So that all these small pieces to help them understand to not spend too much money, and at the end of the day, sit with big bills that they cannot afford to pay.
Yeah. No, you're absolutely right. And I've raised that question to quite a number of bankers, because fundamentally everyone talks about, low incorporation rates. It's 20-something% in South Africa. In markets like Kenya, it's much lower. And, the fundamental issue is that at the very core level, people want to formalize. Like, I've got no problem with formalizing, but I'm just intimidated by the workflows for formalization, right? Like, I don't know if this KRA, this tax pin, if I mess up. So you're absolutely right. And now doing everything from them is like, I always say, like Stripe Atlas. You incorporate, it gets you a bank account, it gets you bookkeeping support. I think it's number one, a very big factor in terms of like customer acquisition, but more importantly in the long term, customer retention, because now the switching cost is no longer just an account. It's like your entire financial life. It's like this is the kind of like heartbeat of the entire business.
Right.
I wonder why more people don't look at it full stack like that.
I totally agree with that. It's not about launching new features, but about jobs to be done or pain to be taken away from customers. And what you see in South Africa, or I think across the continent, is that the majority of these people are still doing their bookkeeping on pen and paper, right? And obviously, you're going to make mistakes because a computer is simply much better at recognizing the different patterns than you would be able to do so yourself,
Yeah.
or being able to figure out what benefits or what subsidies you might be able to apply for. So all of these things are very intimidating, especially if you're a first-time entrepreneur.
Yeah.
So you want to make sure you have somebody there that can indeed support you with this, and not just about right. It might to some degree be a vendor lock for some of these SMEs, but for us it's more about we need to make sure we provide the best service continuously to make sure that we have a right to exist for these customers.
Yeah.
And that is why we want to go beyond banking, because an account and a card is not cutting it, right? You have some that's where it starts, that's where your data gets generated. But how do you then actually work with that data? Instead of having to export that from a CSV, let it sit in the system and actually let the system work with you,
Yeah.
and help you make decisions. And in the future, you can really automate a lot of crazy things, right? But we need to start with getting people used to being able to trust the system,
Yeah.
to help them set up the right things.
And for you as a financial service provider, do you have a strong opinion? At least, does your system have a strong opinion on how someone gets paid? Because I think there's a recent report that now PayShap is growing in South Africa, Capitec Pay is growing. Of course, card payments have always been a major thing. But despite all that, cash is still a major mode of payment in South Africa. Now, if you're kind of automating a lot of this kind of bookkeeping and everything, it's one thing running on let's say Conto or Tide or Mercury, where you're pretty sure that a huge chunk of your payments are going to be digital. There are ways to kind of like reconcile those payments and make sense of them. At least within a South African context, are you seeing good enough legibility of a business's inflows that all this kind of advanced tech can actually now work the way it's supposed to work?
There's of course some industries that are much more cash heavy than others.
Yeah.
Right. Think of handyman or people on the road here and there. So that is where, or convenience stores to some degree. So that is where more education also wouldn't be needed, because for us it would be much better if as much of it is digital payment flows, because then we can make sense out of it. You can actually build the patterns around this, right, and get the metadata from those transactions. When it's cash, the good thing is that all the big global players, right, Visa, MasterCard, for example, but also the big banks, are all pushing for this. In various jurisdictions, you see more and more mandatory e-invoicing coming in. So it kind of forces for the better companies to become more educated in this. And that's why for us it's important to say, well, let us be at the right place at the right time. And we might not be yet the preferred provider for a very cash heavy business, but they will at some point go more and more into digital services. They have to be. And this is also where, right, phones turning into acquiring systems over time. So more and more solutions are coming that are more easily inherited by those smaller SMEs. But that is indeed still a topic where it kind of leaves a gap of insights, because cash just is limited in what you can do with that for a digital bank like us.
And now from a monetization perspective, like for all these services, traditionally Africa, GDP per capita is an issue. South Africa is much better in terms of like the GDP per capita compared to, let's say, Nigeria, Kenya, and other markets. But it always speaks to like willingness to pay issue, especially for financial services. And when the thing is that, of course, transactional services, there's always like a ceiling into how much you can charge for payments and other transactions. But how are you looking at it from, at least what are you seeing from the market in terms of like a willingness to pay for these services?
So we see three key revenue streams for us in the now and in the future. It is the subscription fees, right? A la product bundles, the typical SaaS bundles that you would see, right, with your Essentials, Premium, Pro packages with more features included in the more expensive packages. And then secondly, that's the good thing as a bank or as a neobank, is the what we would call network revenues, right? So a share of the interest rate of the deposits, a share of the interchange of the card activity, which the customer doesn't feel per se, but it's a nice revenue stream on top. And because of that marketplace that we are having around the banking proposition with Radic Zero and Ikoka and many other players, we would get a revenue share from every contract that we are selling to our customer base.
Got it.
So that helps a lot. And we don't believe in variable fees, right? So we believe in having one fee, and that covers all your basic needs that you would need for banking. And that is where, again, right, we did actually 3 weeks ago, we launched a very simple comparison of some of the main banks in South Africa and what their hidden fees actually look like, because they might be touting like, oh yes, our account is just right $1 or $2 equivalent. But if you then look under the hood, you might pay for an SMS transaction or an SMS message, right? Or you might pay for a balance request or for a changing of the PIN of your card. And all those 2 or 3 rand here and there, a couple cents, at the end of the month or the end of the year add up to actually paying much more than a subscription fee. So it's just a bit of an education, of course, that needs to come through. But that is where I think transparency is so critical of being very open in what you're charging for and how our model comes together. And globally, this has worked very well. And people need to understand that it's the big banks charge you at the end of the day much more for it without you really seeing it. So how much can you truly, in that sense, then trust those banks with them sneaking in more and more hidden fees? And at the end of the day, we believe that will be setting us apart because they have been quite relying on those hidden fees left and right. And if they would need to transform that business into a subscription fee, then all of a sudden they're missing out on some revenue, right? So that makes it more difficult for them to compete with the neobanks that you see in the market today.
And there's a lot of like replatforming. You know, if you know how some of these major banks kind of underlying systems work, for you to now provide the full digital experience, there's a lot of kind of like replatforming that needs to be done. That's quite painful, and especially if you see it in the context of the nature of the organization. It's one thing. I was reading about Mercado Libre, and back like 13 years ago, they needed to do a full replatforming because they had built using Oracle databases, and now the likes of Facebook and Amazon, were coming up, and they needed to build a full platform. And they said we're going to build an entire platform from scratch. It's one thing for a startup like that to do, but it's another thing completely different for a major bank to do. So there's also like an underlying limit. But now speaking to your product, do you see any chance of? And let me set the context. A lot of fintechs, Stripe for instance, started off saying that we are serving SMEs, right? Or we're serving like this type of entrepreneur. In fact, Stripe was really built for software developers who want to collect payments, right? But then all of a sudden you find yourself now dealing with large enterprises that are like, we actually need these services. Do you see that at all in your wheelhouse? Like this might actually happen where you speak to some moderately sizable companies and they are keen on what you're building and want to have that service.
We're definitely not gonna say no to them. That's for sure. But it is not that we are, at least for now, I don't see ourselves really focusing on the bigger and larger corporates. I think there are very strong tools out there already, right? Look at a Xero, Sage, for example, on the accounting side, right? Or very large corporates, you really have to go into like the larger Oracle-like systems, probably. But we really look at the smaller guys and the people that have indeed been forgotten for a long time. I don't see us adding a lot of value and go into that very red market of corporate, and that is where the big banks make their big money, right? And then you really start to compete with very deep pockets, which we obviously don't have. So that's a big thing. We'd rather look at how do we in the future make sure that some of these smaller players can grow up enough or have the right foundation to become fully sustainable themselves, and do that across the continent, right? Instead of doing that regionally, enabling them to do that cross borders, not just through payments, but actually managing and supporting their supply demand, looking at import-export documentation.
Yeah.
So we'd rather look at how do we grow with our existing customer base rather than jumping to another customer base that we have yet to unlock.
Yeah, and that makes a ton of sense. But prior to you, entrepreneurs in South Africa were either using something or they had specific workarounds, right? And that actually speaks to your main competition. So maybe walk us through like what your core competition is. Like if a Zazu doesn't exist, how do you do all this together?
So a lot of it is done through the old but very reliable Excel, right? So that is always there.
Yeah.
So what we're hearing from customers is that they're saying, I often need to go through. I log into my one bank account to my other bank account. I download the CSV, or maybe sometimes just a PDF, and I need to convert that into a CSV file myself.
Yeah.
And then I build monthly or quarterly my own pivot tables, which some people might really do and like to tinker with numbers like that, and they should be allowed to do so. But the majority of the business owners, they don't have the time for that,
Yeah.
right? They don't want to figure all of these things out, and actually they would rather inherit a product that is solving a critical need or critical problem for them, and they're willing then to pay for that a bit more. Right? And this is why it is for us not important to have the most SMEs on the platform. For us, it is more important that every SME that's on the platform is actually solving a certain pain point, that for whom we are solving a particular pain point. And that is where it's almost more niche or very personalized.
Yeah.
And maybe an example from the European market, there's a couple of neobanks in Europe, for example, that are very much focused on sustainability, for example. So they're never going to capture the largest market share. But what they do capture is very, very dedicated customers that understand that the values align with their values.
Yeah.
And therefore, the willingness to pay is slightly higher.
Yeah.
And therefore, they can become profitable with fewer customers, right? Compared to an N26 who needed millions of customers with that freemium model
Yeah.
to actually start breaking even.
Yeah.
And that is similar to how we're looking at things, where we don't believe in freemium, we don't believe in giving products for free, because then people
Yeah.
would just use it for fun, right?
Yeah.
But they don't look at it and truly adopt it by paying for it.
Yeah.
So that's a very different approach.
No, you're absolutely right, and I think most people. I think the market exists for specialized SME, kind of provider, because there are so many of them currently, and I think in South Africa you have all the way from spazas, shops, and boutiques, solopreneurs, and everything. And it's very difficult to have a one size fits all. You can potentially do well from a payments perspective, where I'm able to help all these people collect payments. Like mobile money in Kenya, for instance. But like for a comprehensive banking service, I think you're absolutely spot on. There's going to be different markets for different people, and the most important
Yeah.
thing is to be the best in your specific area.
Maybe one more point on this. So take lending, for example,
Yeah.
right? We are ourselves not going to do lending, especially not in the first 3 years, because we simply don't know lending well enough, or we don't know the customer well enough and the
Yeah.
scoring models well enough. But with the data that we have, we can tell the customer, look, we have 5 or 6 different lenders that we have connected into. Let us push your profile to those different lenders so that we know that the best one is coming back that fits your purpose, right?
Yeah.
And then you don't need to apply 5 or 6, 7 different times. You just do it once, or allow us to do a pre-scoring for you. So it is through that marketplace and through those specialized players that we're connecting that we can tap into these niches
Yeah.
more easily,
Yeah.
because they understand that we're actually solving those particular problems. And right, 95 of the products in the marketplace are not going to be used by a single entity, right? They're using 3 or 4 or 5 of these marketplace users, but every customer uses a different combination because they have a different set of problems they're solving for.
Yeah.
And that's what makes us more unique in how we can stack modularly all these different tools together.
Got it. And just to speak to that, do you? I know there's no open banking mandate in South Africa, is there? And
No.
does that have an impact? Because it your product would work way better if if open banking was as advanced as it was in, let's say Brazil or a market like that.
Yeah, what you had in South Africa is more screen scraping, of course. So that is kind of working, but it's not ideal. And we would also rather see, of course, that you can plug in other existing bank accounts that you may have.
Yeah.
Because, right, you might be very loyal to your brand, or you might get a slightly better interest rate from that bank compared to the other bank. And for us, it's important to get those data streams in there so that you can still see that in your financial cockpit at the end of the day.
Yeah.
So that's what's we know that the SARB, right, the South African regulator, is looking at this. We know they're looking at various licenses to make this also easier for fintechs to participate more deeply into the payment world.
Yeah.
So that is all very, very interesting, and that's how you can see how much how big of a role a regulator plays in the actual innovation and enabling of SMEs, and
Yeah.
it's much needed.
But now speaking of something else, and from what I understand, the marketplace model makes a lot of sense, and I think one major accelerator for this might be AI, and I think AI, of course, everyone thinks it's a buzzword. I don't think it's a buzzword. I think it's like the most powerful technology we've seen in a long time. At least not in my life. I haven't seen anything like this in my lifetime. But I was here with a gentleman called Kamal, and we were saying that there's a role for like a financial AI, right? So if you could think about opening your Zazu app and saying like, I'm running short of cash and I need to pay my workers in 2 weeks' time, right? And it takes in that intent and says, okay, given your past cash flows, given what we know about the lenders in the marketplace, given what we know about your monthly payroll, then I think we should now get this specific working capital loan from this specific lender to kind of like make sure you make payroll at the end of the month. And I think that speaks to a marketplace model as opposed to like a full stack bank, because if you're a bank, you want to keep all your options in house, and that kind of will limit the quality of the service you're providing. Is that a future you foresee, at least for Zazu, or how do you think Zazu is going to leverage on AI?
Yeah, we are actively talking about this. So we actually hired an AI company from Cape Town a couple months ago to really make sure that fundamentally or foundationally we are having AI at the core.
Got it.
But we also understand that a lot of AI things are hyped, right? So we don't want to just wave the AI flag like
Yeah.
the hundreds of other companies out there are waving the AI flag.
Yeah.
We are seeing AI more as kind of like how 30 years ago people looked at digital, right? Like, oh, digital is so cool, it's so amazing.
Yeah.
Big companies set up their digital innovation hubs and build out all kinds of cool solutions that never made it back to the mothership.
Yeah.
That's the same, I think, with AI. It is a better way of how you can interact and have customers interact with data. It is helping you unlock previously not easily recognizable patterns or solutions, right? As you said in your example, I have this problem, how can I solve that? And the more options we have then indeed available, the more likely we find a suiting solution for you. So AI, especially agents, not so much customer support agents. I think that's still a bit of a way to go. But when it comes to helping you understand what should the next step be, right? Maybe it is paying that invoice now because you get a discount, or maybe paying it later because, right?
Yeah.
So all of these small steps in terms of cash flow management and explaining that to a customer in natural language instead of in CFO language, I think will go a very long way, tapping back into a lot of people not having a PhD in finance, right? So how do you help them understand how to grow the business?
Yeah, and I think you're right. A lot of these technologies, the whole underlying thing is to reduce the frictions, right? So, for instance, if 10 years ago, WhatsApp and Instagram enabled way more people to now open up a business, sell, and create some kind of storefront, then AI should reduce further frictions, and some of these further frictions in terms of like knowledge, context, insights, right? And if you can give me some kind of like CFO support, if you can give me some customer support, at least like some commercial analytical support, that may be valuable.
Yeah.
Now going forward, like what does growth look like? What is the next 1 year, 2 years looks like for you guys? I know there's still some kind of wait list. So just walk us through that. When are you fully live? When are you just hitting the markets? What are your short-term priorities? Stuff like that.
Yeah. So the expectation for us is to go live after the European summer. So let's call it end of August with the first set of customers in the beta go live, right?
Yeah.
So they are able to transact funds left and right. That's the current timeline. We very much believe in staying in one market at least for one fiscal year, just to make sure we have ironed out all the different wrinkles and found out all the outliers that exist with tax reportings and everything else. And we use that blueprint to then go into the next market. And that next market will be very much dictated by our existing customers. Who are they remitting to within Africa? And right, the much larger vision for us is once you are live in 5 or 6 different African countries, how do you connect these countries together so that you have a much larger network to work with? And that is a really a missed opportunity from some of these Pan-African banks who have 14 or 15 different countries that they operate in,
Yeah.
but these systems don't talk with each other
Yeah.
by any means, right? So
Yeah.
they're very isolated systems.
Yeah.
And that is where I think you can really build a very, very big and really cool system to make those local SMEs continental SMEs and really give them that ability to grow through your banking or through your finance hub
Yeah.
system that is Zazu.
Yeah. And
Yeah, so that's the big one.
you're absolutely right. I mean, what tends to happen is that Bank A wants to get into this specific market. They acquire a license mostly through an acquisition of a smaller bank, and they continue running on the core banking system of that license for because it's not a priority. And so you have this kind of situation where these systems are not speaking. Speaking of like now going Pan African, and this is down the line, where do you see the roles of things like at least crypto or stable coins in enabling that kind of Pan African money movement? Or do you just see it as that we can, maybe you haven't even thought that far, and that's perfectly normal because it's good to prioritize. But do you see a situation in which stablecoins can now support this, or do you think you can, with existing rails, you can actually make a good job of it? And the reason I ask that is because I think if there's a bit of clarity, as you mentioned even earlier, for some of these larger banks, even within subsidiary treasury movements are difficult, and sometimes maybe that's where crypto stablecoins come in.
Yeah. I can give you all kinds of buzzwords on stablecoin, but the truth is, I honestly don't know enough about it to give your listeners or any meaningful insight on this.
Yeah.
Only thing I do know is that in many African jurisdictions, you of course have still monetary exchange policies that at the end of the day make this still quite difficult to realize.
Yeah.
It helps to circumvent some of that exchange policy probably,
Yeah.
but whether that's the right way to go, I'm not sure. But no, indeed, as you said, for now we are very heavily focused on getting the MVP out, which doesn't involve stable coins.
Yeah.
I am on the side advising and supporting a couple companies on different stablecoin solutions, but nothing. I couldn't yet say anything meaningful about that, unfortunately.
No, it makes sense. I think those are some of the buzzwords right now in the market. I think it's good to focus on what your core priorities are, and for you, for sure, it's the MVP.
Yeah.
And just like winding up, right now you have like a business account, you support digital incorporation, you're enabling like invoice management, expense management, and I think you're building right now bookkeeping and cash flow, right? And that's something that you're building, and I think as your first crop of customers go live, I think that might as well be live. How are you looking at sequencing the next set of products, or are you just looking at it in terms of let's see how this works, let's see what's adopted, and then we build from there? Or do you have a specific view in terms of what comes next?
So there is indeed those main modules that we're looking to bring live first. There will be, of course, feedback on that, and there will be adjustments that need to be made on that. So that's going to take probably some time as well. One thing that we are then looking heavily at is from that marketplace, which are these tools that are most popular, and to which extent would we either have a deeper integration with those companies to make it a bit more of a native experience, or to what extent do we leave them more on the edge of Zazu, if you will, and just do the data sharing. And also, I think, especially for us being so young, it is important not to have a fixed roadmap for 6 to 12 months in advance, because you need to stay agile enough to pivot around and to listen to your customers. So also that's one of the reasons why in the first year we're not going to push hard for tens of thousands of customers, but try to keep it to around 1,000 customers, just to give us enough ability to actually speak with these customers and understand who we are building for and what problems are we solving for them. So that is more what we're doing and what we're looking at, and keeping that a bit more open.
Yeah.
But it will be, for the foreseeable future, definitely more around optimizing finance streams, right? So as you said, bookkeeping, expense management, and similar products. And then in the future, we would look more at, so let's say 1 or 2 years from now, we would look at adding productivity tools in that as well, which very closely can then be aligned with finance products.
Got it. Yeah, and it makes a lot of sense. Like financial tooling first, because that's like kind of now your promise, right? Like we are unifying a lot of that SME finance. And in the life of an entrepreneur, a lot of things happen. Sometimes you have to be bold. Sometimes you have to be slightly delusional for you to actually build some of this stuff out. But you must derive your conviction from somewhere. And in your last year, couple of years, building out Zazu, has there been one specific anecdotal thing that, a story that has kind of like enforced your conviction? Like when I saw how this customer did this, I knew we were onto something.
Yeah. The first thing that comes to mind actually is in the earlier days when we just had mock-ups, right? But being able to understand or have a customer grasp what we're trying to do. So that customer, and that was mostly neobanking, to be fair, right? So mostly account cards and payments. And that customer, but we had some digital incorporation flows in there as well. And that customer then said, but actually, guys, are you saying that I can build out my whole business on top of Zazu and manage it from there? They were like, well, actually, why not, right?
Yeah.
And then we started to think about this a bit more. So well, why don't we build this out a bit more broadly, and really make sure that all of these streams are captured instead of just the neobank side of things. So that was very inspiring. That's definitely something that sticks out quite a bit. And separately, more looking at an existing tech company in South Africa where we were talking with. They said, finally somebody that can do card issuing without me having to go to the branch, or without me having to sign and stand in line and waste 2 or 3 hours. It's nice that they offer me coffee, but I don't care for coffee. I care for doing this as efficiently as I can behind my computer, or in the evening when I'm fixing some last things before going to bed. So these are the things that keep you driving, right? And the feedback we're getting from these customers is so amazing that keeps us at it.
Great, man. No, it's fantastic, and thank you so much for sharing that. Like it was good. It was good speaking to you guys. A few years back. Good to see the progress you guys have made. Keen to see how this journey maps out going forward. And yeah, man, we'll stay in touch. Let's keep in touch and see how this thing goes. And wishing you guys the best. When you're in Kenya, let me know. When I'm in Cape Town, I'll definitely reach out.
Perfect. No, Terry, thanks a lot for allowing us to do our story here and to express how we have come through Zazu and all the ups and downs that we're facing. And once we're live a bit later, we definitely should do this again and see if the promise has come to life, or if there's other pivots that we made.
For sure, man. Take care.